Hey everyone, today we're going to be talking about every single thing you need to know about price action trading using a candlestick momentum. I'm going to show you exactly how you can find high probability entries using this price action strategy. In fact, this is super easy to learn that you can start using it right now, today, right after this video. So if you're new here, go ahead and subscribe to the channel because we release videos just like these, and we have a lot more advanced videos coming out in the next following weeks. And if you are already subscribed, welcome back. And let's get started. How this price action strategy works is we're using momentum loss. So what we're looking at is we're looking at the actual candlestick shapes and candlestick sizes. So in order for this strategy to work, the first thing that we must look for, and for those of you that are already subscribed to the channel and you have seen my videos before, you guys know the first thing we look for is a zone of interest, a ZOI. So in this case, I've identified a most recent relative high. This is a point of rejection where the price might have a probability of reacting. However, we're not just going to blindly enter at any random support and resistance area because we want to try to get the highest probability setups. You can get more setups if you blindly enter, but you also have a high probability of losing more of your trades. So we want to get high probability setups. So what we're looking for is we're looking for momentum loss. And let me kind of explain what I mean. As the candlesticks are approaching the resistance zone, the zone of interest, we want to look for the candlesticks getting smaller and smaller and smaller in size. So every time I'm hitting next, one physical day is passing. So you can kind of see the movement throughout the whole week. I'm currently on the weekly chart. So you can notice as the candlesticks are forming, you can see at this resistance zone what is actually happening. So let me kind of go back and explain what's actually happening here. You see, this first candle was a large, very bullish candle. The next candle that formed was smaller, and the next following candle that formed was even smaller. And it also showed a potential sign of rejection because it has these long wick candles that are constantly rejecting at this top wick area here. So this is showing a sign of weakness, a sign of loss of momentum. The candles are decelerating. So if you're able to identify a zone, a resistance zone, a zone of interest, and you see the candlesticks are approaching that zone and the candlesticks are decelerating and showing signs of rejection because the candles are getting smaller, and in fact this next candle was red, showing another sign of bearishness, which means a lot of selling pressure. If you see something like this, this shows a very high probability setup to enter a sell. And I'll let this continue to run. So this would have been a perfect entry to enter a sell because we're using confluence of a zone, and also we're looking at actual price action using candlestick momentum. Now let's do another example, but I want to reiterate the fact that whenever you're looking at decelerating candles or loss of momentum, you want to make sure that you want to combine that with a zone of interest. So let me kind of give you an example of what I'm talking about. It's not enough just to find candlesticks that are losing momentum or decelerating. You also need to combine that with another technical. So let me just kind of give you an example. We see here a long red bearish candle. We see another candle, and the next candle is getting smaller, and the next candle is getting even smaller. So this could be a potential sign for momentum being lost, even smaller. And in fact, this shows a potential rejection. But let me ask you this. In this area, is there any clear zone? Is there any clear support or resistance area? I don't think so. This is not, there's too much sloppy price action for this to be a clean zone. So while this is decelerating, would you look for a buy? Probably not, because you want to try to combine this with an actual support or resistance area. Okay. Here we see another sign of the candles starting out large, getting smaller and smaller and smaller and smaller, showing a lot of candlestick rejection, losing momentum, weakness in the candles. But again, the same question as before. Is there honestly any real support and resistance area here? There's too much sloppy price action for this to be a clear zone. So this would not be an ideal time to trade in this area as well. As you can see, if you would have taken this trade, you would have sat here for a while at your break even. Like, let's say you entered a buy at the zone. You would have just been sitting here for, we're on the hourly chart, you would have been sitting here for hours and hours and hours and hours and hours on end until the price finally went all the way against you. So this is also not an ideal time to use this technique. You always want to make sure that whenever you see deceleration in the candles, like this or like this, you also want to line it up with a very clear support or resistance area. So now that you guys understand the candlestick momentum loss must also coincide with a support and resistance area, let's talk about another example so you can truly understand this. So we are looking at NZD CAD right now. There's a resistance area. The price has had trouble breaching this area, and you can see clearly that the candlesticks were very bullish, and then the next candle was smaller, and the next candle was even smaller, showing a long wick rejection, and the next candle showed a long wick rejection as well, and it was a bearish red candle, and the next candle closed bearish as well. This is all of these different factors are showing a loss of momentum to give you a high probability area to enter a sell. And as you can see, the price continued to go down. Let's talk about another example. It doesn't matter what time frame you're on, whether you're a scalper, a day trader, swing trader, position trader. This works on every time frame. Right now, we are on the weekly time frame. The previous example, we were on the 1 hour time frame. So let's go ahead and see the momentum moving. So you see long red candles, and each following candle is getting smaller and smaller and smaller and smaller. As you can see, this coincided at an area where there is a strong support level. So this is an area, as long as the candles are getting smaller and smaller and smaller, and you see a sign of rejection, this shows a very clear area to enter a buy. So we can see entering on this trade would have netted us around 145 pips. Now, before I get into another example, let me just kind of explain why this works and what the psychology behind all of this even is. Because it's one thing just to show you guys some examples, but it's another just to kind of explain and explain the psychology behind why this stuff even works. So what's happening here is sellers right now are in control. They're in massive control. And as the price action approaches this strong support level right down here, what the sellers are doing, the sellers are taking profit, the sellers are closing their trades, and the act of closing a sell position means you have to buy it back. So what this is doing is this is putting a bit of buying pressure. So the bears are losing steam, and then the bulls are gaining momentum. And there's a lot of buying pressure being activated right here, which causes a potential sign of reversal. So if you see price action that's very quick and it's moving like a train going 100 miles per hour, that's probably not a good area to enter your buy. You always want to be looking at areas where the momentum is being lost. Why? Because people are taking profit and closing their trades. I'll go ahead and show you a lot more examples throughout this video to make sure you truly understand how this concept works throughout various different market conditions, because not every time frame is the same and not every week or month is the same. And before I do, I would really appreciate if you drop a like on this video and comment down below. It'll really help the algorithm get this video shared to people who need to see videos just like these. That being said, let's go and talk about this example right here. We're looking at USD CHF, and you can see the price action with these long green candles getting smaller and smaller and smaller. And if you see a situation like this where it's kind of hard to tell whether the candles are getting smaller or bigger or staying the same, one easy thing you can do on TradingView is you can click on this little measure tool right over here, and you can actually just measure the candles themselves. So I'm going to click right here, and I'm going to measure the top of the candle. You can see this is around 135 pips right over here, 135 pips for this green candle right here. Let's measure the next one. The next one right here starts down here, ends right up here. This one is around 126 pips. Let's measure the next one here. This one starts down here, ends up here. This one is 115 pips. As you can see, each of these candles are getting smaller and smaller and smaller, and it's very clear that this next candle here has gotten even smaller. It's losing a lot of momentum, and it has a long wick rejection towards the top, specifically at the area of this resistance. And in fact, if you didn't enter your trade here, you could potentially wait on the next candle and see the next candle was also a long wick candle, which was also bearish, that would have allowed you to enter this trade right over here. So let's talk about another example. Right now, I am currently on the 1 hour chart, and I already have my zone drawn, but let me go ahead and talk about how to draw these zones for those of you that don't know it and are new to my channel. So how we draw these zones are, we want to make sure that we try to encapsulate as many of the lows as possible. Notice this is encapsulating one low, the next low, the third low, and the fourth low. We want to try to encapsulate as much of the lowest points of the lows as possible, and we also want to try to attempt to make these zones as thin as we can while still encapsulating all the lows. That's kind of why you see I haven't stretched this out to meet the bodies here. I just have it encapsulating these little wicks here because I at least want to touch the wicks, but I don't want to make it super thick. So I want to try to keep it as thin as possible because this is in this area is where we are looking for signs of reversal. So let's go ahead and talk about the current price action right over here. So we see a huge bearish momentum, and each following candle you can see is getting smaller and smaller and smaller. The train is now decelerating, the car is slowing down, and when the candles were initially all red, we're now seeing a mix of also green candles, some bullish price action. So this deceleration, this parabolic move that you see right over here, this is a very good sign to enter your buy right over here. As soon as you see the price reacting and rejecting throughout the zone, this is your indication to enter a buy and then continue to ride the wave of momentum. And here you can see a long, very strong bullish candle. The next green candle is smaller, and the next following candle is smaller as well, with a long wick towards the top. And the next candle is also a long wick candle at the top, but the difference between both these candles, this next candle is red, showing another sign of potential reversal. This is representing a color change, and this candle closed bearish. This candle closed lower than where it started. So let me just kind of zoom in and show you exactly what's happening here. So this green candle opened up right here, closed above, while the next candle opened up right here and then closed below. This would be a very good sign to enter a sell. And as you can see, the price action continued to go down. And remember guys, we want to look for these type of reactions at areas of support or resistance. It's not just enough to look at a color change and say, hey, the candle has changed colors. You want to also line these up with other technicals. So let me talk about what you don't want to see. So what you don't want to see whenever you're approaching a area of support and resistance, we see there's a clean support area right over here. And had you had this drawn out, we see the price action is very bearish. Next candle was smaller, but what happened to the following candle? This was a strong momentum candle. Even though the next candle was green, this was just the sellers doing a bit of profit taking before the price action continuing to plummet downward. So if you see a price action that looks like this is a bull trap. You do not want to be caught in something like this, seeing the buy and then entering your trade on the next candle, because you would have been completely wiped out of that trade because you weren't paying attention to the momentum of the candles as it approached the actual support zone. Now, looking at this next example right over here, this is a very clean and clear resistance area. And as you can see what's happening to the candles, from this very bullish candle, the next candle is getting smaller and smaller, and you can see the price action is getting more bearish. This would be an excellent area to enter a sell because the price action is losing momentum. So the main thing you have to look out for is you want to be very, very careful if the price action is approaching the support or resistance area with momentum. So let's go ahead and do another example. This is a very clear area of rejection, a very clear area of a key level, but we need to see how the price action is approaching this level as the price action continues. These are both very bearish candles, and the momentum is not looking good. So if you see something approaching as quick as this and the candles are extremely bearish, this is probably not an area where you want to look for a buy. You want to try to avoid areas just like these. So let's talk about another example. Here we have a support area right over here. And let me ask you, would you enter a trade with this type of price action? Probably not. There's a lot of very bearish candles. And if you entered a trade, that would have been a very sad trading day for you. So this is something that you do want to avoid. If you were a support and resistance trader trading just off of support and resistance, and you looked at this and you wanted to enter a buy just off of this support area, this would have completely wiped you out on that trade. So it's very important that you look at the actual price action that's happening along with the support or resistance areas. So this is another example of a resistance area, very clear resistance, and you see the candlesticks getting smaller and smaller and smaller and even smaller and changing colors, showing a potential sign of reversal. Same exact thing that's happening here. This is our first support area, and as the price action is decelerating, it's losing momentum. You see these big candle that's getting smaller and smaller and smaller and smaller. This shows a potential sign of reversal, so this would also be a good area to trade. Now, I don't know if any of you have noticed, but there's also a rejection area right over here, and let's go ahead and draw that. So we have our resistance area drawn over here, but is the price action of the candles, is the price action accelerating or decelerating? You can clearly see the candles were small, 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 and then grew, and then even another big candle. So this is showing a sign of momentum gain. This would be a support and resistance area that you want to avoid entering your sell on, and this would have saved you losing a potential trade, and instead being patient and waiting on this resistance area, because you can see the price action is now finally decelerating, losing momentum, and the candlesticks are changing color, showing a long wick pattern at the top, showing another potential sign of reversal. Let's talk about one final example. So let's go ahead and draw our support and resistance area. So remember guys, we want to make sure we try to encapsulate all of the lows, and we also want to try to keep this as thin as possible. So what I'm doing right now, I am scanning with my eyes this low, this low, this low, this low, and this low, while also trying to keep this as thin as possible, while still capturing as much of the wicks as possible. So now that we have our zone, let's talk about the price action. Remember guys, we're looking to enter our trade somewhere on this zone once the price action approaches, but the main thing we want to pay attention to is what is the price action looking like, what are the candles telling us as the price action approaches this zone right here. So obviously this is not a good area to enter a buy. This is very bearish momentum. So what we can see on the other side of this, instead of entering this as a buy, we're looking at the support and resistance area. This was once a support, which is now turned into a potential resistance. So what we're doing here is actually we're entering on what's called the break and retest of this same zone, turning the support area into a potential resistance. But what are we looking at? We're looking at the momentum shift of the actual price action. We see a long bullish green candle, the next candle smaller, next candle smaller as well. We see small candles, and we see our first red candle. The next candle here is creating what's called a gravestone, and it's showing another long wick rejection up here. Let's see what the price action happens after that move. So this is a high probability entry where we looked at our zone of interest, our support and resistance area, and we also combine that with price action with momentum loss using the candlestick patterns. Now, guys, trading isn't hard. It's not about guessing. You don't guess whenever you enter trades. We want to look at specific technicals, and that is what price action is. Price action and technical analysis is looking at what we see on the chart and using different patterns and using different techniques to give ourselves high probability entries and also avoid trades that we would have lost otherwise, not paying attention to price action and technical analysis. Now that I've given you multiple, countless examples, go ahead and practice this and try it yourself. You don't want to just watch YouTube videos all day. You also want to make sure you take action. Life is about taking action, not just sitting there being stuck in mental momentum, thinking that we're getting stuff done. We want to always be doing what we call MMA, which is money making activities. You have to put this into practice yourself, and do the stuff that needs to be done so you can refine your entries and get better and better and better. And if you're someone watching this, maybe you're brand new, maybe you've been trading for 4 or 5 years now, and you're looking for some personalized mentorship, maybe you're looking at someone to look at your charts, see what you're doing right, see what you're doing wrong, maybe help you dissect your trading and help you create and formulate a strategy that works, we do have a private mentorship program as well. It's invite only. There's a link in the description. You can get more information about that on our website. It's not for everybody. It's for people who do want some additional help. That being said, I hope this lesson was helpful. Subscribe to the channel if you haven't subscribed already, as we do release videos like this very frequently. And go ahead and hit like on this video if you haven't hit like as well, because it really does help out the channel and I really do appreciate it. That being said, have a great rest of your trading week, and I'll catch you guys in the next video.